and currently 11 a.m. New York for another few weeks until daylight saving time arrives in the UK. We had an incredible week last week, some amazing episodes. We covered everything from AI bots, and by the way, that Freddie New article about his AI agent that he's just released into the world autonomously, that AI agent has written an article itself, which he has shared, and it's harrowing. I don't know, I need to introduce you first, but we had this amazing conversation last week, right, where one of the guests has set up an AI agent with its own Lightning wallet and its own social media accounts, and just said, basically, do what you want. And then it wrote a blog post about its experience of having its own money. It's absolutely incredible. I'll link it to you. But anyway, we had that. We had BlackRock. We had all the big announcements around ETH-B. Lots and lots we talked about last week, and this week, no different. Huge conversations. And to start that, I have Tianwei Liu of StraitsX. Thank you very much for joining us. I'm looking forward to this conversation. How are you today?
I'm good. Thank you, Robert. And thanks for Cointelegraph for having me here today.
Our pleasure. Yeah, I almost skipped the introduction there. This is the problem, right? I have guests on, and we talk a little bit before we come on air, and then I kind of forget that the audience haven't seen you before. Okay, let's start at the beginning, which is usually the best place. What made you want to build in this space? What's your background, and how have you ended up at StraitsX?
So I think it's a good question. If you start off first, I'm an engineer by training.
Yeah.
So before all this, it's about almost 10 years ago, I was an Amazon engineer. I used to be writing code, how to map reduce back at Silicon Valley in the Bay Area itself.
Really?
About 10 years ago, on Naya Black, I started the company. We actually, the heart of it, we are a payment company. That's something that always was relying a lot of our friends and also our clients. StraitsX itself started as another name called Xverse, which is a payment infrastructure company, focusing on alternative payment out of Asia, right? So we actually came out of Y Combinator in the Bay Area.
Really?
So, really, we're
that.
one of the Samo 15 or Samo 16, I remember, right? And I think Coinbase is just one batch of seniors or the two batch of seniors, right? So we one of the earliest payment players in Southeast Asia during the last wave of startup growth and fintech growth. Focusing on alternative payment, like I mentioned, like to allow the digitization of technology to happen, which is accelerating around the 2015, 2016 time period. But if you fast forward, like I said, we provide on and off ramp solution. And over the course of the last 8 to 9 years, we tend out to be serving the earliest frontier fintech. And if you look at Asia, you realize that a segment of the fastest growing fintech segment in Asia is actually on the blockchain side, right? Singapore, which is where we are based at, has been a beacon in terms of a regional hub for Web3 innovation. And you talk about both at least from a regulation perspective. So most of the regulated exchanges in this part of the world are based out of Singapore. So we were one of the earliest guys that served Coinbase, like I mentioned, Binance, Gemini, Crypto.com. Some of these guys we still are very proud to share that they are still our clients. So we provide the fiat on and off ramp solution, right? Because you need to figure out how to get your money into the exchange and then get your money out if you make some money down the road. So that was actually how we started the business. As a fintech infrastructure solution provider. And we also like a very common payment acquirer. So we have about 200,000 offline merchant across Singapore and Indonesia, which is one of the most populous country in Southeast Asia itself. And then you fast forward to what happens over the last few years, which we see crazy adoption on the Web3 side. We decided to rebrand ourselves into StraitsX because of also regulation changes. We became recognized by the Singapore MAS, which is the Monetary Authority of Singapore, as a well-regulated stablecoin issuer. Out of Singapore itself. So we launched the first Sing dollar backed one-to-one backed stablecoin, XSGD, which is now on Coinbase and supported on the base chain and a wide range of other chains, using it for real world payments. And so last year, we also launched XUSD, which is our one-to-one backed US dollars stablecoin regulated by the MAS regime. It has been on Bybit, Coinbase, Binance, and Big itself, right? So those are some of this frontier has been doing. But at the heart of it, we are a payment company. And if you see our tagline right now is stablecoin rails for real world payment, because we believe in real world use cases of stablecoin, which is going to be where the future is at. And happy to share a lot more real world use cases that we are seeing right now, especially proud about some of the stuff that we did about 2 years back. Which today, if you come to Singapore, I hope you guys do, if you're using any of these more popular Alipay Plus e-wallet app, which is a very big thing in Asia Pacific, right? So it can be Alipay China, Alipay Hong Kong, Touch and Go in Malaysia itself. you will be able to scan a merchant QR code, which is by Grab merchant. Grab is the Uber equivalent of the US, right? It's the largest ride-hailing platform in Southeast Asia. They have about a very large merchant and payment footprint as well. So you can scan and pay a Grab QR code using the Alipay app, for example, and simply make payment as a tourist. So to you, this is just a normal e-wallet experience, right? You scan the QR code, you enter the amount you want to pay, and you get a payment confirmation instantly. But at the back end, every single transaction is settled real time on the Avalanche blockchain using XSGD, the Sing dollar stablecoin. So that's something that we piloted 2 years ago. So it's no longer a dream. I think this kind of use cases has been talked about for years, but in Singapore, it's a reality. It has been running in production for the last 2 years. And fast forward, what we are seeing right now is a lot more frontier adoption. And happy to share more. But we're doing quite a bit on the card issuing front as well. We are also a Visa principal card issuer out of Asia. I believe we are now one of the largest APAC stablecoin-backed card issuer as a service. So we power some of this very household brand. I think you probably heard of companies like Redor Pay or Bionex Card or even OKX Card that has been issuing that's backed by stablecoin.
Yeah, I definitely want to get into the card side of things, but you said something just before that I think is worth probing, which is real world adoption, current use cases. Now, we've had some really interesting conversations over the years. Last summer, I remember having a conversation with a company that was doing stablecoin payments in South America and talking about the adoption that they'd seen there, which was primarily out of currency destabilization and sort of unbanked, semi-unbanked people. And it was kind of warming to see that. But it did also feel a little bit like a fringe case for most of, the US, for Europe, for Asia. It didn't seem quite as prevalent here. Whereas last year, I mean, really, we saw stablecoins just erupt in all directions. What are the sort of primary use cases you're seeing right now?
Yeah, I can speak from where we are seeing things at what we call the epicenter and the APAC itself. I think by some stats, APAC, represent about 70% of all stablecoin transaction in the world.
Really?
I think the underlying, first use cases that we see is that if you think about it from a stablecoin perspective, the global demand for stablecoin, ultimately, if I distill it down, is a global demand for the dollar. The dollar is still the largest, cross countries settlement currency in the world. In Asia Pacific, everyone say APAC, we're talking about 10 different countries. International trade primarily still settled in the US dollars, right? So when that is happening, the organic demand of that for trade settlement is the first primary use cases from the B2B perspective, right? We see a lot of cross-border trade happening. Like I just distill it down for you. I think people have told this many times, right? Like the world has been run on the SWIFT network for US dollar settlement outside of the US, right? If you want to send a wire, you do a wire transfer. That's not something that a lot of the common folks will know, but from a B2B perspective, you definitely have tried it before. If you do a SWIFT transfer, it's slow, it takes couples of days, so we don't have to reiterate on that. But if you bring it back down to an experience that you can see that I was just explaining earlier on, like the QR code example, right? An Alipay user come to Singapore to scan a Grab merchant QR. So Grab is one of the largest QR acquirer in Singapore, for example, right? So this is not something new, right? QR code scan cross-border has been happening, in adoption interoperability over the last few years. But we as a major acquirer have been doing this part of the business for many years as well. And traditionally, how it usually always work is that when the QR code scans, you get confirmation of payments real time, which is just digital, right? The EDC, which is the terminal, will just confirm your payment real time. You get your coffee, you move on with your life. But settlement is a separate process, right? Settlement is done at the end of the business day. We accumulate everything. Then we work on the wire transfer timeline. Except for the merchant, might be a 3 days later thing. So this is something that has been working for the last, foreseeable future, after 20, 30 years. That's how it has always been done. But the problem that he introduced have also been solved. The first problem he brings up, of course, is FX fluctuation, right? Where you're coming from, you're paying the currency that you're buying a coffee settled in a local currency with the 3 days or 7 day delay. We do not know what's the FX spread, right? So what most of this way of doing this solutioning is that we introduce a FX hedge and a spread, right? So the MDR, the cost for the merchant accepting this form of payment is always higher, right? Because there's this risk involved for the acquirer to settle. The other part, of course, is the settlement delay, which introduces a liquidity problem, right? Like it's not uncommon, like just the previous Lunar New Year. We just celebrated Lunar New Year's over in Asia Pacific, right? During those period of time, most of the cross-border settlement stops because the banks stop working. So like merchants, you might be transacting large amount of tourists for a good 10 days period. That's literally how long it stops in China. For 10 days, it will just stop. You wouldn't expect settlement for 10 days. But then the sales is goes up, right? So you need to find out how to solve your liquidity problem. So these are the real world problem that a lot of us consumer don't see it, but that's where stablecoins solve. And that's the first adoption that we saw. Like the reason why we did it with Alipay and Grab is exactly this, right? With stablecoin transaction, the transaction that you scan and pay is settled real time with a stablecoin. A stablecoin transfer is both a communication, so the machine detects it real time, confirm the payment, but it's also a settlement because the stablecoin has reached the wallet belonging to the merchant. And then immediately the merchants can work with us to get it settled back like a fiat domestic transaction the next business day, which is pretty much what this kind of innovation have been adopted in drove in Asia Pacific. People are seeing that using stablecoin, they can get around the slowness and the inefficient part of Swift. And that was the first wave of adoption that we are seeing in drove, right? That this itself helps to improve my liquidity, drive my efficiency. And Asia, being one of the largest, exporters of raw materials and stuff internationally, and trading with China as a lot of the regional countries itself, have a lot of this kind of flow. And that's where they traditionally can be using Swift. They can now use stablecoin to do this. And that's the first wave that we are seeing maybe in the last few years. But if you then double click on this whole narrative, another big part that we've been seeing here is, as I mentioned, the global demand for stablecoin. It's a global demand for the US dollars. In this part of the world, in APAC and a lot of this region itself, it is not actually very easy for a consumer or a retail to actually get a US dollars exposure. What I meant here is like, I'm in Singapore is a pretty well-to-do country. Most Singaporeans do not have a US dollars account. It's not easy for you to get one. Maybe they don't need one, or even if they want one, their local banks might ask a lot of questions. They might have to put up a minimum deposit, pay a fee to get a US dollars access, right? So it's just not common. But stablecoin changes that. Like it gives access to a worldwide audience, ability to have quickly a US dollars account. They can hold US dollars. And I'm not talking about Singapore, of course. Singapore have a pretty strong currency, but in the regions around here, some of these currencies are depreciating quite a bit over the last year itself. They might want to hold it in dollars. And that's what we're also seeing another wave of adoption, especially on the retail side.
It's so interesting. I remember when President Trump took office, I remember the conversation of stablecoins came up, and Treasury Secretary Scott Bessent said, I can't remember word for word what he said, but it was along the lines of, we are going to use stablecoins to keep the dollar, the global reserve currency. And I thought at the time, God, that's clever. I think he might actually be completely right. That's the path to do that. Do you think it is, and do you think it's working?
Well, if you look at this, is that really happening in terms of people adopting stablecoin outside of the US, and then that driving the demand of short-term treasury bill? I think it's for sure. You just look at the market cap of stablecoin; they're just increasing, and the two largest like Tether and USDC, and even us, right? We are regulated to require us to back it one-to-one with short-term, high-quality liquid assets, which in most cases is US dollars treasury, right?
Yeah.
But yes, I think that is seen in the numbers. It's actually working. But at the same time, would it solve the US treasury problem completely? That's a whole different question, because most of the demand are for short-term treasury, right? We have to buy it for 12 weeks or less. I think the one that Scott Bessent is describing that's having problem is how to sell the longer 10 years bill than the 5 years bill, right?
Sure.
But it does solve the short-term side. And you can see that there's a shift in terms of the treasury demand and the way they've been issuing out new treasury. The short-term demand is definitely there, and I would say stablecoin, issuers like us are a key contributor, and it's a brilliant idea because that itself you increase the TAM, right, of potential use cases for US dollars.
Yeah, absolutely. I think it's one little follow-up question I have, I guess, is when it comes to Singapore. Singapore to me feels, as you say, well-to-do country. It has a very high average income. It has. It's always been
fourth highest GDP in the world, I think, per capita.
Yeah, exactly. And it's always been how I've seen it is a sort of tech hub, a financial hub. My friends that work in either industry, tech or finance, often find themselves in Singapore for various reasons. It's one of those countries that's just done particularly well. I was surprised that you would say anyone would really be interested in having a US dollar account. Is there much demand for that? Does it really solve a problem that's there?
So first and foremost, Singapore has one of the largest, so-called crypto adoption in the
Yeah.
world. I think by percentage, I think some stats I saw is like 23% of Singaporeans residents actually have some form of crypto assets
Yeah.
or exposure to crypto assets. That's high by international standards. I think most of the national average, I think the global average is probably around 7%. So
Mm.
that's already on the frontier side. I think Singapore folks are just a lot more receptive to new technology, or they want to try and actually use these things. So very savvy group of residents itself. But at the same time, like I said, the demand for the dollar itself is a bit different because it depends on what is your use cases, and do you think that having US dollars holding is actually beneficial for some of the financial transaction you want to do, right? So like I would say that the use cases, the demand for a US dollars denominated account or US dollar stablecoin is slightly different for a retail residence out of Singapore compared to someone in Indonesia or in Philippines, right? Because
Mm.
that is just a big, like I say, it's a safety hedge. Singapore is very strong. Actually, if you look at it from a stats perspective, I think the recent days, I mean, just days, literal days, US dollars have shot up, so we have recovered quite a bit. But if I look at it, that this, Sing dollars has appreciated against the dollar at least 3% over the last year itself. So it's a pretty strong currency. So the demand for us to hold it for safe assets is not as big, but the demand for a use case perspective is high, right? Because like I said,
Right.
with a US dollar denominated, I can do cross-border transaction a lot cheaper. I can move dollars around, fintechs, or is it get exposure to US stocks a lot easier through all these Web3 new frontier fintech.
Interesting. Yeah. Uh, I think I want to stay with Singapore being kind of ahead of the curve on this stuff because there was something you mentioned before, which is cards. And I think this is an
Mm,
interesting point. Now, we published
mm,
an article, I think it was last week, that Visa and Stripe are expanding their stablecoin Visa cards. Um,
mm.
you guys have been doing that for a while, right? Like
Yeah.
that's that's something you're already leading the way on.
Yeah, absolutely. We are sharing early on. I think we are one of the largest stablecoin backed Visa card. So, like I
Mm.
said, we are a payment company, a payment infrastructure company. So, card issuing is not a new thing for us. We
Yeah.
actually been in this business issuing card as a service for fintech company. I think that the pickup was really starting of last year, where after the Genius Act passed, there's a rise of what we call Stablecoin Neo-Bank, where I think it's backed by what I was talking about from a thesis perspective, right? The global demand for US dollar stablecoin is a global demand for US dollars account. So now neobanks are popping up that is going global from day one. They allow somebody to download an app, get eKYC within 5 minutes, give them a US dollars account which they can deposit via stablecoin. And then on top of that, it's about what do I do with the stablecoin right now, right? They can now spend it via a card itself. So this is something that I think is truly a breakthrough if you look at it from a utility perspective. Like I just mentioned, Singapore maybe is not really the key ideal audience for that, and that has shown up in the numbers. Regionally, like someone in Indonesia, they just being able to get a US dollar saving account, getting a Visa card, it's not something that's very common to a majority of the white collar. And if you
Mm.
extrapolate that across APAC, that's where it's been pretty big. We see huge adoption in like countries like Thailand, in Philippines, in even Hong Kong side, right? That these are the folks that actually want this kind of product. So we've been doing this for the last 3 years as an issue of of cards, but it only really picks up last year. That I think we're a very strong category, and that's also been shared in the Visa earning call. That category, which is stablecoin backed card, is the fastest growing segment in this part for Visa, and especially for us, right? We see that in this part of the world. We have served a lot of stablecoin neobank that have came out really in the last few years. Some of them are like Pay, Pionex, UPay, like they're doing very well. And exactly the audience I was talking about, they make it easy for anybody to just get eKYC, sign up for a US dollars account via stablecoin, and then immediately attach a debit card to it. So this is something that has been running quite a bit mature in Asia Pacific because there's a real demand here. And again, the strategy here for a lot of this company is no longer about like again, fintech issuing card is not a new thing, right? We have Revolut card, we have Wise card. These are a segment that's been pretty mature. But the real breakthrough is because of stablecoin. Stablecoin is borderless. The old model of doing this is to have to go country by country, get local licenses because you need to get local payment rails set up, right? But now the new frontier for a lot of folks with Visa help, with Visa global waiver of issuing cards is that I go global from day one. I serve anyone, and I only support stablecoin rails because I actually do not have to build out individual rails. My customers will figure out how to get their own stablecoin from local regulated exchanges. They will fund the wallet, but they will get a card product that they can spend in 150 million merchants worldwide instantly. So that is a game changer.
Yeah, I mean, it makes a lot of sense. I tell you what, I think when it comes to stablecoins, I really felt like they were going somewhere as soon as I started being paid for things in them, which was a few years ago. Um, I realized that there was still a lot of friction. I couldn't really spend it. I couldn't pay my mortgage in it, things
Mhm.
like that. So I would have to sell the stable coins. But the ease at which I could receive them and the speed, I knew that it would be prevalent within the next few years, and I think we've probably barely scratched it. But one thing I'd say I didn't predict, and I don't have a payments background, so it's not surprising I didn't predict it, but I didn't think we would see the proliferation of so many different stable coins. I imagined a world in which
Mm.
one or two, like Tether or USDC, were going to just dominate, and they have. But we've also seen a lot of stable coins issued. You guys have obviously done several yourselves. And then we also saw we've seen a lot of companies saying that they're going to launch their own, a lot of banks saying they're going to launch their own. Do you think that's now the direction we're going? We're just going to see more stable coins, and there'll be kind of a complex ecosystem behind the surface that most people won't see? Or do you think it will expand out and then maybe start to consolidate?
Mm. So we take a view that actually that this whole market is still in the first inning, right? It's still very early, and there is
Yeah.
still a lot of room to grow. I think by most of the estimates, by is it JP Morgan and Citibank, that there's a few trillion of market that should we get to, and that's like 8 to 10 times the current market cap, right? So that is quite a
Yeah.
bit of growth still, ready for that to be capitalized. But I think two theses is probably going to be happening, and that is how we view about it. Is first, the first one will be non-US dollar stablecoin will definitely be popping up around the world. We see that in Sing dollars, which is one of the pioneers here with us, and of course you sort of see in Hong Kong and more jurisdiction. Because if you think about it, even though like Scott Bessent is trying to push US dollars world domination and getting more adoption over there, every country will want to have their own pricing capability and like currencies as sovereignty, right? So getting local goods to be settled in their local currency will be a main mandate by most regulators. So because of that, introducing bills and technology allowing regulated local stablecoin is a trend. You already see that happening, and I think it will not stop. So you will start to see a lot more regulated stablecoin of local currency coming out around the world because it just makes sense, right? You need to be able to spend locally, and then there will be FX capability and a lot of DeFi other stuff, technology that will build out. So this will not stop. But then on the other hand, even on the dollar side, you're absolutely right. I think there's still a lot more players coming out because ultimately, I feel that if you want to issue stablecoin, and I think I mentioned before in other podcasts, is that you need three things. You need regulatory compliance, and that itself is now shaping up to be a lot more clearer. A lot more players can get themselves properly done with that. The second part, of course, is you need banking support, right? Getting tier one banks to come in to support you. Actually, in the early days of crypto, has been a major so-called mode of the business, right? Not the banks might not want to work with you, might not. It's quite easy to actually issue a stablecoin to be not illegal, but to be fully compliant is a spectrum, right? But then getting a bank to work with you, then is whole different whole level of the game they have to get through. And that too, you will see a lot more players that think that they can do better because of their ecosystem, their background. They will definitely do that. But then the third piece is always about what is the use case here? And
Mm.
that's something that I think all the new players are still stretching their head around. But then if you think a bit deeper here on the question here, then there are certain players just have a mode that makes sense that they will want to issue their own stablecoin, right?
Mm.
Like I would just be surprised that if not Apple is not thinking something about this, right? So the
Yeah.
large players that already have their own ecosystem, it just makes sense for them to be involved in this. So I think with the Genius Act passing, with hopefully with the Clarity Acts also eventually going to be coming through, all these large players that have been sitting on the fence, they have their own ecosystem, will definitely be thinking about it or at least pushing to have their own stablecoin as part of their ecosystem play, right? So that's how we see the market. And that's why you see what we've been focusing on. Even though we are so-called regulated stablecoin issuer out of Singapore itself, we see a world with a lot of stablecoin. Actually, we are pretty agnostic. We're pretty neutral on stablecoin. We use all of them, like be it USDT, USDC. because we are focusing on the use cases, which in where we will see, and it's already a trend, like as I mentioned. I think the singularity of money needs to be preserved. And actually, most of the retail end users, in my opinion, will not be seeing the actual coin being involved. Like the example I was just sharing with you, right? You are just buying a coffee and you're scanning and paying from Alipay and Grab. The whole experience does not describe stablecoin, because I think a lot of the folks like my mom and stuff will not care about what stablecoin is. They just want to get her coffee and move on, right? And that will be extracted away by companies as a back-end settlement rails. So if that's the case, it doesn't really matter how many stablecoin is really out there, right? This will be a back-end FX and a fee transfer system that will be like the internet, right? It will be a protocol level thing that will be handled. The user experience is what really matters, right? Can you just get your goods and services? And a lot of the use cases where we're seeing that adoption is happening are always the seamless one, be it the QR code I mentioned. And now, stablecoin card is a very good example of that, right? The whole experience, why it has been adopted in Wave, is that they're riding on rails that everyone is familiar with. Like you're using Apple Pay, you're using Google Pay, you just tap, you just pay. Actually, underlyingly, you can hold a multiple range of different stablecoin. It doesn't really matter, right? So you can spend your USDT, you can spend your USDC, you can spend XUSD. Maybe the exchange rate is just slightly different because of different incentivization and unit economy in terms of settlement time, but the experience is the same. You just tap, and the merchant will not know actually underlyingly what they're receiving. They just know that at the end of the business day, Visa will pay them. And that's how I think the world will continue evolving.
There's a lot of really interesting threads to pull there. I think Apple Pay is perhaps the most interesting for me because I hadn't really unpacked the thought. But I use Apple Pay every day of my life. It's seamless. I haven't carried a wallet for about 6 or 7 years. I just have my phone, I just tap, done. And in a way, all of these payment providers can sort of become a bank. If I could just have stablecoins in my Apple Pay and set that as my primary payment method, I would. Like I would just, and I would let them hold my USDT, USDC, whatever. I would let them hold my stablecoins, which is a really big component in this, right?
Yeah, you're just describing the whole entire business case of this rise of stablecoin neobank. Like
Yeah.
largest one of our clients is called Pay out of Hong Kong. I think they just raised at a 4 billion valuation in a very short period. I think from their launch is probably 3.5 years ago. One of the
Mm.
fastest stablecoin neobank adoption around the world that I've seen. And exactly that. They just start off with I will give anyone in the world that is KYC and proper actual US dollars exposure through stablecoin, right? You on-ramp with a stablecoin, you hold a stablecoin over there, and I give you a card, a Visa card. Mostly 99% of the users do it through Apple Pay or Google Pay, right? A digital one. You don't want a physical card. You just want something you can tap and go. And that
Yeah.
has been the killer utility, the MVP features that I'm seeing almost a rise of this kind of stablecoin neobank around the world, right? That immediately get traction, right? And then beyond that, then is okay, now you have a wallet that you spend every single day. It's taking dollars. Do you want to buy stocks? Do you want to get a saving account? Do you want to stake it to get some interest? Do you want to borrow and leverage? So the whole space of the DeFi space that we've been seeing over the last few years can now be built into an experience that's very similar to what banks traditionally do, right? Because you're exchanging your local currency, you can do payout, you can do withdrawal. These are just features. But the use cases is really what have been driving this kind of growth, whereby people are starting to see that actually I can hold on to a dollar saving account as a bank account for folks in Indonesia and Philippines. That is a game changer because in the past, like I said, if you're holding to a depreciating currency, you have no much choice. You just don't have ability to do that. Now with this kind of stablecoin neobank, I can hold on to a dollar stablecoin. I can save in dollars. I get a US dollars exposure that I can buy, maybe tokenized stocks, tokenized RWA. That's a lot better than what my bank can offer me out of Singapore, or I mean, not Singapore, Indonesia, right? So that is the main, I think, driver for this kind of adoption.
What represents the biggest risk to this? Because it seems so intuitive and so beneficial for everyone, really, apart from perhaps banks that are a little bit stuck in the past and don't pivot quick enough. What's the biggest risk to this fulfilling its potential?
So there's two sides of the coin, right? I think one part is always back to regulation and compliance. Most of these products like the neobanks are centralized, right? We came from a blockchain space. A lot of folks are true believer of like decentralization. We've seen this bloom and bloom for a couple of companies that shall not name them directly, but that thing can happen all over again because users just like realize that they think that they are keeping money with someone they trust, and they think that it will always go up, but it might just go bust. So that itself is what I think the industry will still need time. And you see regulation catching up, right? Which is why I say the best players, the players that have been doing well, are the one that embrace regulation. They know that in the long run, they need to work with local regulators to ensure the safeguarding of the client's funds, segregation of funds, AML controls. So this itself is one part of the industry that I think might have some, black swan event. They have some breakdown again, and we must scare people. But at the same time, I think it's in the right direction. It will get better, and the best players are the one that embrace compliance, right? On the other spectrum is what you mentioned, right, about the bank side, right? This might be something that you see a lot of discussion right now in the US around the Clarity Act, right? Is it possible that stablecoin issuer are able to give out interest, right? Because it increased the cost of funds for banks. On one camp is what Mr. Brian and the Coinbase folks, which I supported of, that we should let people compete, right? That the stablecoin players should be able to give yield to their customers and then build a better product around it. But then on the bank side, of course, they will be worried that their cost of fund increasing and how this will affect the lending rates. So this is two sides of the stuff that we have to see it from different perspective. But if I were to make a bold prediction, I would say that it is inevitable that in the coming years, all banks, any reputable bank, need to support stablecoin. It's like if you're running a bank right now and you say that I don't support SWIFT, like it's the kind of like turning point already that your bank will be obsolete. So some form of involvement in stablecoin, at least allowing you to on-ramp, will be a bold prediction. I would say that will happen within the next 3 to 5 years. Any major banks that worth their salt will have to support this rails. This is an actual payment method itself.
Yeah, I remember saying last year there was, I can't remember which companies were involved, but there was a stablecoin yield of 9.8%. And I remember thinking, if they could maintain that, then people wouldn't be able to afford to stay with a bank. Like you're kind of forced to adopt stablecoins, because why would you leave 9.8% on the table? You're getting nothing in your current account, nothing, even a savings account at a bank. I mean, I can only speak for the UK, but a savings account in the UK doesn't outrun inflation. So, I mean, it's fundamentally pointless. Whereas if I've got 9.8%, suddenly that's not so bad. Your emergency fund or rainy day fund or whatever, getting 9.8% certainly doesn't seem that bad. And I remember wondering last year whether it would funnel people towards stablecoins, not through how quick it is or the fact that it's borderless, but just by that yield alone could entice people in. And that's how I've imagined a lot of the pushback going over the Clarity Act. And
exactly.
Banks just worried about flight.
I think product like this would definitely be something that traditional bank will be a bit stressful about. But I just want to be a cautionary tale. Like 8 to 9% sounds too good to be true.
It does.
Yeah, it does. So usually there's some hidden skeleton somewhere. I think this is why I say this is a balance, right? While the industry, I think a safe rate will be probably around what Treasury bills is always bad, plus minus maybe 50 basis point. That's probably where things are rightly going to neutralize around. When it's too high, I think, like I said, without naming the names, there are a few things that have blown up before because it's really a Ponzi scheme. But on the other hand, I think being able to offer something close to what Treasury yield is generating is not something that is impossible to sustain in a sustainable way, and it's a real contender to major banks, right? Because like I mentioned, even in some of the local banks in Singapore, where in the local currency, your saving rate is almost zero, right? They don't see it as something that they need to work hard to get you to keep your funds there, because they just have so much retail deposit, right? And that's something that will change, in my opinion, with hopefully in the right direction, with Clarity X getting the right direction and more stablecoin Neo-Bank coming out and offering competing products.
I've got a follow-up question that's only sort of partially related, I guess. But one thing I'm wondering is where CBDCs fit into this landscape. And I'm something of a Bitcoiner. I hold a lot of the cypherpunk values pretty dear, and I value decentralization over centralization. So I've been critical of CBDCs, and to be honest with you, I don't really want to see them. But I'm not looking at them through the lens of a payments provider. I can see the benefits, certainly, but I think there are better ways. Where do CBDCs fit into the stablecoin landscape?
So maybe I can expect it from a payments perspective as a payment
Yeah.
operator for the last 10 years. So I do think that there is a space for CBDC, but I think most of the it's a bit debating, right? I think the jury is still probably out there, but I think most of the reputable mass or the central banks around the world, at least in parts of the world, have probably already tried experiments and they indicated that a retail CBDC is quite unlikely
Mm.
from a push out and operation perspective. At least in Singapore itself, MAS has came out to say that they don't think that is the right direction. A
Mm.
wholesale CBDC does have value, right? Whereby it is just like tier one money supply, a settlement between large banks, right, with the central bank, which
Right.
is something they already do today. They usually have similarly some reserve ratio they had to pledge to the central bank. That itself would have better efficiency if they can just get a CBDC that's wholesale, that only large bank and the bank, central bank itself use as their moving funds and between central banks, right? So there's efficiency that can be gotten out there if there's some kind of product like this, right? So that's where I think where things will probably stay at for most of the central bank around this world. It will be a more wholesale approach. Then you will start to see also a category what we know as tokenized bank deposit, which is what private bank like real banks, right, that are licensed chartered banks that will be issuing out their stable coin backed by their own balance sheet. Actually, this is not different from you having a JP Morgan account. I have one JP Morgan account as well, right? It's actually the in your app you see the amount is actually some form of tokenized deposit, right? But it's not
Yeah.
in the form of token. Token is just a in a blockchain term, right? But it's actually just a ledger that is existing in a centralized way that tells you that this is how much JP Morgan owes you, right? So that space is also where we see a lot of discussion right now by a local regulator that is around this around the world. That again, there will be a benefit, right? Just allowing better efficiency of settlement between banks and some retail to hold on to the bank that they like, because you actually do that anyway today, right? But I think this will all coexist with regulated stablecoin like us, because that itself is something that is 100% backed by treasury bill or like one-to-one back. You can't do lending. There's no balance sheet that is being held out by the bank, because that's not something that traditional e-money players are looking at. So if you look at where we are seeing as a payment perspective, before this whole blockchain thing comes by, in the old world that we live in, there's central bank money, there's private bank money, there is e-money, right? The whole fintech revolution that we talk about is actually these three things in the last 20 years, right? Now there's a one-to-one mirror of that. Central bank money probably will have wholesale CBDC. Private bank money is just going to be tokenized bank deposit. And e-money, in some sense, is just really stablecoin, regulated stablecoin, right? Which is one-to-one back itself. So just that they are all now running on a blockchain world. And if you see that in the past, we have these three assets and they coexist, right? I think the same thing will happen in the world that we are in today, right? It's just different use cases for different audience that is needed, right? So they are all just a different assets class, and they might overlap in small places whereby you can use a tokenized bank deposit to do the thing that tokenized money, which in this case is stablecoin, can do. But there are use cases that is much better to actually just use a stablecoin than to use wholesale CBDC. That's where we see.
It's interesting. I feel like now we've had this conversation, I feel like we've been long overdue a stablecoin episode, because so much has changed, particularly last year. I think perhaps I didn't appreciate how much was changing and how quickly in the stablecoin landscape. Um, if 2025 was as big as we know it was at this point, what's 2026 going to be like? What are the sort of changes you see coming this year?
I think the 2026 is going to be really doubling down on the momentum that's created since the passing of Genius X in 2025, but very
Mm.
specifically will be on real world use cases of stablecoin. And as I mentioned, a few use cases already, but the one that we are seeing that I think will be really the biggest part of this year's narrative is how do you spend your stablecoin? And spending it through a card network has been the largest adoption that we are seeing right now in this part of the world. This part of the business have like 40x for us as an issuer over the last, from a transaction dollar size, over the last 10 months to 12 months. And we are seeing a drove of this kind of company coming out because, like I said, they start to serve a need, right? Whereby a space of the customers that previously unable to be served, they want a dollar account, can now easily get it. And at the same time, the issuer of this kind of product can provide it at a very low cost to them, right? Because in the past, if you use a Swift and all the ancient way of doing things, it's just very costly to serve a customers. And because of that, you naturally price out a lot of customers itself, right? If you just keep a $10 deposit with a bank, US dollars bank, they will not give you a US dollar checking account because it's just way too expensive for them to serve you. They can never make money. And even, a big part of the way I started the company about 8 to 9 years ago in APAC was about financial inclusion. We think that digitization will help to really solve this problem in APAC. But in reality of the day is that, you can't do charity, right? No business can run on just charity motivation. You actually need to make money. And if a customer is never profitable for you, you can never serve the customers in a more sustainable way. But stablecoin with stablecoin card changed this narrative fundamentally, right? Right now, it's very easy to offer someone worldwide after EKYC and digitalization a US dollars account, give them a card, and this can be an immediately profitable business for the issuer itself. So I think those are the main driver that you will see: the real world adoption, a demand for US dollars stablecoin or US dollars account, and demand for a product that allows you to spend it at 150 million merchants worldwide. So this will be the biggest part of the growth that will drive this, which is the adoption of real world use cases and payment.
Amazing. Okay, look, we've gone over the 40-minute. I estimated, which isn't uncommon, but it was a very interesting conversation and I didn't want it to end. So Tianwei, thank you so much for coming on. We really appreciate you taking the time.
Oh, thank you, Robert. I truly enjoyed this. I think we can talk for another hour, but this is definitely a space that we would love to come back and talk more about this.
We'll do another episode later in the year. We'll catch up and see where we are. Okay, that is it for another episode of Chain Reaction, Cointelegraph's daily show here live on X every single day at 3 p.m. London, 4 p.m. Paris, 6 p.m. Dubai, 11 a.m. New York for another couple of weeks. We've got a big week this week. I don't want to tease anyone yet because we've not locked them in and I don't want to look a fool. But we do have some really big guests in the works and some big conversations. And the world is certainly not boring at the moment. So there's plenty to talk about. Thank you very much for joining us today. And we will see you again at the same time tomorrow.